Hi guys, Kayong here from Alpha Play, Chief Currency Strategist. It's great to be able to connect with you again, right? And we have a very good session last evening talking to our community in Singapore itself, right? So, moving forward, we'll most likely be conducting such events almost every month, all right, on a monthly basis. And during this meetup is where we share with you some of our insights to get connected with you to address some of the questions regarding trading, be it fundamental sentiment, technical analysis, or even trading psychology, risk management. All these things will be discussed during the meetup, all right. And I won't bore you again in terms of what we covered for the meetup yesterday. But I'd just like to quickly cover some of the things of how can we apply the things that we shared with you into the market itself. Right, it's all about application and making it applicable to your own trading. Right, so the first thing I want to walk you through it's this table, right, which is the fundamental strength index. And once again, if you are very new to what this simply captures the overall economic performance of individual country. Right, and basically how we do this is we capture the economic data out there that is available. All right, we put it into our Excel sheet and then we compile based on our weightage, based on the importance of this indicator, and we come out with an overall index in terms of the strength of the economic performance in the particular country. Right, so a quick outlook over here, you can see that Aussie is in a contraction, right, and Kiwi is in expansion mode. All right, similar for dollar is in an expansion mode, whereas if you look at Euro, it's slightly positive, but it's more or less towards the neutral side. So what I want to focus is how then this can be applicable to your trading. All right, so I entered three trades to just show you how you can actually apply this into your own trading and into the financial market itself. Right, the three example that I want to share with you, of course, is revolving around the Aussie trade. All right, so this is weak. Aussie is weak, all right. It's also revolving the Canadian, but you realize that Aussie CAD both are in a contraction phase. All right, basically means fundamentally these two countries are not really performing economic wise, but I'll share with you how we combine not just the fundamental but also the sentiment, what is happening in the news. Right, the other example, the other two trades revolve around the yen and the dollar, as well as yen and the British pound. Okay, the British pound is not just about fundamental, but it's also a little bit into what the outlook, the future outlook coming from the central bank itself. Okay, so it's very interesting because these three traits really talk about fundamental economic performance, talk about sentiment, as well as talking about looking into central bank's monetary policy statement to make a trade decision. Okay, so I'll just like to go over to the chart later on, right, to really further elaborate, so to make this more towards an educational video sharing as well. Okay, but because the pound itself is more towards a central bank monetary policy statement trade, let me just in this sharing as well to go over to the UK side. Right, so this is the latest monetary statement that's released by UK. All right, basically the Bank of England. What we can see, all right, this is a summarized version. All right, if you want to read more in depth, we do have a reference over here. Okay, so basically what I want to walk you through is that overall the tone from BOE in its latest statements is more towards neutral to slightly bullish, all right, slightly hawkish. Basically, if you read into overall, what they are saying is that they did expect the Brexit impact to be very bad in the economy itself. But based on the latest statement, they mentioned that most of this pessimism is not as bad as they have projected. All right, so overall, it seems like the economy is not hit as bad as many of the investors and economists has projected. All right, so overall, it's actually a good thing for the UK. All right, you can see that they now expect a less slowing UK GDP. All right, and it's more on the other slide is that near-term outlook of housing market is less negative. Indicators of consumption have been a little stronger than expected. All right, both are positive statements. Inflation is expected to rise around its 2% target in the first half of 2017. Again, a slightly positive statement. All right, and of course over here, outlook at that time is judged to be broadly consistent with the August inflation report projection. So these are still in line. Alright, so this gives a slight hawkish tone towards the UK itself, and that will give some momentum towards the upside on the pound. Alright, so just to go back to this table itself, so even though the fundamental economic performance is still in slight contraction, alright, basically this is very small, so it's more towards like neutral to slight contraction, but the monetary policy statement is more towards the hawkish side. Alright, so that's a balance between it. But if you look into dollar, alright, dollar fundamentally is strong. Japan fundamentally is weak. Aussie fundamentally is weak. Canadian, I'll talk about it using the oil because that's a sentiment trade. Alright, so let me go over to this one. Alright, so if you are aware of it, yesterday or depending on where you are in the region of the world, this one happened this morning at 4 a.m. Right, basically OPEC has a meeting, and if you click onto it, right, you click on the latest release, you go to their report. Basically what they are saying is that they'll meet up again end of November this year, right, and they are more into making a decision on in terms of controlling the supply and making oil prices stabilize. Right, and that pushes oil prices higher. Right, and if you are familiar with oil prices, the correlation between oil and Canadian dollar, okay, when oil prices rises, there's a tendency and correlation that the Canadian dollar will rise as well. Alright, so this particular trade which is the Aussie Canadian short that we took is really based on the sentiment itself. Okay, so let me go over to the chart and explain even further in depth so that it becomes an educational example instead of just sharing with you the trades that we take. Alright, so the first one I want to share with you is dollar yen. Alright, so this is one of the smaller accounts that we manage. This is dollar yen. Okay, and we actually bought it when price broke above this structure high, right? And this is not a technical, it's not a pure technical trade, right? But it's really based on the fundamental of dollar, which is strong, as well as the weakness from yen. Alright, so if you couple a strong currency and a weak currency, you do get a very clear kind of direction. So when price break above this technical structure level, which is a previous resistance, right, we entered on a long trade and expecting price to go higher. Right, so this is the most simplest and clear-cut trade example where we just based on fundamental economic performance to enter a trade. Right, and of course you see this purple line in terms of what it means. It's something very similar to the intrinsic value. Right? If you do trading, alright, in stocks or investing in stocks, there's this term that we use called intrinsic value, or the fair value of a particular company or particular stock. In currencies, alright, this is basically the fair value or the intrinsic value of this particular currency pair. Alright, so how we derive this is really based on the fundamental economic performance of two currencies in relation to price. Alright, and so this is what we coded out. So where we are targeting for this particular trade on dollar yen is of course at the fair value. Alright, and risk management aspect kicking in is that whenever we are in profit, we do want to protect our capital and our downside as well. Right, so this trade has been moved towards break even. Alright, so this is the simplest basing on fundamental economic performance to enter a trade. Alright, pound yen, okay, which is not just on the fundamental aspect of it, but it's also towards using the outlook from the central bank monetary policy statement. Alright, so even though it's in the downtrend, right, but the recent statement from the BOA itself is more towards a slightly positive tone. So that's why when price break above this previous structure level again, right, previous resistance, we entered on alongside. And of course, again, the target that we are aiming for is at the fair value of this particular pair, right, the intrinsic value of pound yen. So this particular trade example we are using based on monetary policy statement, having a bias towards the upside for pound, alright, coupling with the weakness from the Japanese yen itself. Alright, the last example I want to walk you through is Aussie Canadian. Alright, so far it's been running very good for this trade. Aussie Canadian, we are riding on the weakness in terms of the economic of Aussie. Alright, the Australian economy is not performing. But this driver the driver for this particular trade is actually not the Aussie, not so much on the Aussie side, but it's really on the Canadian dollar. right, which I share with you. This is a sentiment trade because of the OPEC meeting yesterday or this morning in Singapore, right? When oil rallied, Canadian dollar will strengthen as well, and that is the key driver that drives this currency pair itself, right? And again, when price break below the previous structure support level here, right, that's where we enter at this break. The target will be again at the intrinsic value of this particular currency pair. Right, so that's the three traits that I'm going to share with you how we actually use a concept, a knowledge, a theory in fundamental and sentiment, and directly applied into the trading application itself. All right, and we want to show you that it is doable and it's not something that's very tough. All right, but the next part. Alright, so what I'll do is I'll include the slides, alright, which is this one, the slides that we shared yesterday during the community meetup, and at a link below this video as well. So feel free to download and use this slide as a reference, alright, for your own educational purpose. Right, but I want to walk you through another thing which we are doing as well, which what I call is, to me, is an intraday trading setup. Right, so what I mean by intraday is that I only trade when price fits into the trading session, which is usually the UK towards the US session, and I tend to exit that trade once this trading session ends for the day itself. So I don't usually hold my trade overnight or even over the weekend, right? So this is purely going in on that day, coming out on the day itself. So how I prepare and position myself is really during the UK session start, right? So mainly on the Asian session, I'll do all my analysis on my portfolio, and I spot for any areas or key levels that I'm interested to take a trade on. Okay, so for example, this is euro dollar on the H1 time frame. So just some nitty gritty thing is that I only trade on H1 time frame. I don't go any higher, I don't go any lower. But if I want to be more in detail in my entry level, I'll go drop my time frame to lower time frame. Alright, but in terms of analysis and making decision is always on the H1 time frame. Alright, so over here on euro dollar example is I've highlighted and zoned out in gray two areas that I'm looking out to take a trade. Alright, should price reach that level and give me a decent price action rejection. Alright, price action rejection here I'm referring to either a pin bar formation or a double top, or a bearish or bullish engulfing. Alright, so these are the main common price action patterns that I'm trading. So what I'm waiting for is, price currently is hovering around this level of 1.122. Right, so as long as price doesn't go to my highlighted area, I'm not going to even consider taking any trade for today. Right, so today the only levels that I'm going to take a trade on euro dollar is when price hits the higher area or the lower area. Right, and of course, if you are quick enough and you're sharp enough, these two areas are mainly Fibonacci levels. And again, I'm using the three strategies that we taught, that we usually teach in our master classes. Basically, either a trend following strategy, a counter trend strategy, or a range environment strategy. Right, so right now you can see over here euro dollar is in a range environment, and of course we then adopt a range methodology to tackle this market environment. Right, and if you are even sharper and even quicker in looking out, understanding the market itself, you realize that these are actually patterns, alright, advanced patterns that we usually take. Right, so if I simply draw in the how it looks like, right, this is actually a bad pattern formation, alright, completion at the 88.6 level. The other one will be a sharp formation, completion also at the 88.6 retracement level. Right, so again, this is a quick sharing in terms of intraday, right? And what I want you to pick up is not just where I'm looking out for, which level I am looking at, but it's more of picking up the thought process that I have, right, and the methodology in approaching intraday trading. Okay, so just to share with you, the upper level that I'm interested to look out for is around 1.1265, right? And the bottom level that I'm looking out for is at 1.1138, right? Around that region, right? It's not as specific as, I must enter at that very specific price level, but as long as price reach that region, that area, and you see a rejection of that, that's where I'm going to take a trade. Right, so this is for euro dollar. Pound dollar, there's nothing much for intraday. Dollar yen, nothing much as well. Nothing much for Aussie dollar. Okay, Kiwi dollar. We do have a level that I'm looking up for over here. It's around the 0.7360, right? So this is again another pattern that is forming, right? So if you are into this, you can look out for Kiwi dollar. Just to point out something is Kiwi dollar fundamentally, and if you look into the most recent monetary policy statement from the RBNZ, this trade itself shorting the Kiwi dollar is aligned technically, fundamentally, and as well as using the monetary statement, they are all aligned. Right, so to me, this is a very high probability trade should price comes back up towards that level. Right, dollar CAD, we see this drop simply because not because but it is driven. All right, the catalyst is driven from OPEC meeting this morning as well. So what I'm looking out for is we do see a small trend line being broken. All right, we do see an RSI divergent at the top. Alright, so this is actually our counter trend strategy. What we are looking for is waiting for price to retrace back up towards the 61 Fibonacci retracement level, right? And we will look to enter a trade in the early start of a trend, right? Because the previous trend was up, a break of the neckline, double top divergence, as well as this small trend line. That's showing an early sign that there's a rotation in terms of the overall trend, and should price retrace back up towards the 61.8 Fibonacci level, that's where we're gonna take a potential trade to ride on the short trade, right? So this 61.8 Fibonacci level, the level in terms of price is about 1.3185. Right, so should price comes higher, we'll be looking for a potential short. Euro pound, two levels that I'm looking out for. Alright, one is at the 61.8 Fibonacci level, the other will be 88.6. Alright, that will be at 0.8667. And the higher level that I'm looking out for is 0.87. Alright, it's a whole number, it's a psychological number. Alright, so this one we have two setup. One is a potential pattern formation at the 88.6. The other one is actually a divergence. Again, we have a higher high, but my RSI prints a lower high, so that's a divergence over here. And what price did was a break below this neckline. Right, so as long as price retrace back towards the 61, I do have a potential setup as well. Right, Euro yen, nothing much. Pound yen is the one that is potentially setting up very close as of now of what I'm doing at this particular point when I'm doing this video. The completion point is at 132.45. Alright, so if price shows a rejection of this level, I'm looking to short. Right, this again is a pattern formation. Alright, which is a cipher pattern. Right, so not a very decent one in terms of the ratio of how these points are being made. But again, I don't trade based on how nice or visually aesthetic the pattern is, but it's really based on Fibonacci ratio itself. Right, Aussie Canadian is still falling. Again, very similar setup. We have a divergence at the top. Price has broke this trend line, and what we are looking out for is a retracement towards 61.8. Look for a short opportunity, and in expectation that the uptrend has now shifted towards moving lower. Alright, Aussie Kiwi Euro, nothing much. Euro Canadian, very similar. This one is more of a new trend formation. Okay, we have a new low, alright, a new high, a lower high. The high is here, the low is here, a lower high and a lower low. Right, so what we are waiting for is just a simple retracement towards the previous structure low. Look for a short opportunity in expectation that the downtrend will be continuing. Alright, this level we are looking out for is around 1.4775. And if I just simply draw a horizontal line at this level, you can see it's a decent structural level. Support, resistance, support. Alright, so it's a very strong structural level. Should price comes up, again, a very high probability trade setup. Kiwi Canadian, nothing much. In terms of gold, again, a very similar setup. Price now forms a lower high. Alright, so it's actually it's a structural trade. So if price comes back up towards this previous structure support now turn resistance, we'll be looking for a trade to short it, opportunity to short it, in expectation that the trend will continue. All right. But again, I'm not actively trading the commodities market. Just pointing out that you can apply the same technical methodology in commodities market as well. All right. Other than that, oil, S&P, and the German DAX are nothing much as for intraday today. Right, so that's about it for this video. It's slightly longer than my usual video, but I really want to put this video out not only for the intraday setups and potential opportunities to trade in the intraday session today, but it's really to also use this as an educational video to share with you our thought process, some of the system that we have, the thinking process that we have, the methodology that we use to approach the market itself. Right, so if you really like this video, do subscribe to our channel, click like on this video itself, and if you have any feedback or suggestion or any particular topic that you want us to talk about in trading, feel free to write them down in the comments below, right? And I will answer all your questions from there on. Alright, other than that, trade according to your plan, always manage your risk, and I'll talk to you soon in our next video.